So it's a Pakistani wedding, right? So Pakistanis,
Oh.
like Indians, we have like 5-day festivals to get married for some reason. So it was the first of 5 days worth of festivals.
How many Indian weddings are there on the Amalfi Coast? Is that a known area to go to?
I don't think so. Like they all seem very like into this whole thing. Like all the locals are like, this is very interesting and different. Usually there's like one event and everybody's done. Here, like yesterday was getting used to the fact that we're having this event here. So the locals are quite fascinated by it.
Are you guys all doing like a cooking class together? That's what you
No,
do
we're
on the
not
Amalfi
doing cooking.
Coast.
We're not
Are
doing a
you
cooking
mix
class.
Indian cuisine with Italian cuisine? I'd love to see that.
Like a nice fusion. My parents were in Barcelona.
Did you know that's what you do on the Amalfi Coast? Is you do cooking classes? You didn't know that?
Yeah, I was like, no one told me that.
All of my friends that have gone to the Amalfi Coast, which I haven't been since college, and took the train down Sorrento. My trip the Amalfi Coast was just seeing like the cliff just like pass by. That's like all I could afford at that time, is like just on the train, just looking out like, oh, look at all those like very, very wealthy people. But you know, now everyone just says they go, they have great cooking classes, and they enjoy the vista.
Everyone says two people that you've spoken to recently.
People say
no, they're not.
What's the in thing in Amalfi? Not the yacht,
not the yacht.
It's the cooking
not
class.
The clubs.
This is Top Line.
This month's sponsor is Closed, the industry leader in win-loss analysis. The only thing worse than missing quota is not knowing why. Win-loss analysis with Closed provides detailed and unbiased feedback directly from your buyers. So when you're looking for answers, you'll have the concrete data-driven solutions you need to make the strategic decisions with confidence. If you're curious about how win-loss analysis can boost your win rate, give Closed a try. We'll do a free buyer interview for one of your deals. Visit freebuyerinterview.com now to claim your free interview. That's freebuyerinterview.com now to claim your free interview.
All right, I see how this episode's going to go. We're starting the same way last episode did.
But it ends in a nice sandwich.
It does. Your house looks nice. How are you? What's new?
I'm great. I'm really doing well. We are on week 2 without the kids. So my wife and I have had 5 glorious nights out together and been
that's
been
awesome. That is awesome.
It is awesome. It's great. It's like, I mean, kids are great. Everyone, they're really good. But
you had to say that. It felt very forced.
My parents listened to this. My mom gave me feedback. She said, AJ, I listened to your last episode. You speak wildly too fast. So does Asad, but he has a nice accent. You're just speaking too fast.
Has your mom ever said anything nice about your performances on this podcast?
No, I just get critical feedback all day long. It's very good.
I got feedback from my mother about my white hair. She's like, listen, it's really showing. I was like, what? What part do you like? I like the white hair. It's distinguished.
You look fantastic. You are a sexy man.
I need to hear this shit more. I'm gonna listen to this recording.
I'm bounced back. You know how I bounced back? I bounced back by listening to our pod. Actually, last night was a really weird night because I went to this. So I'm supposed to go to the All In Summit in LA, and so this woman messaged me on the app, and she's like, "Hey, I saw that you're in the Hamptons, and there's a poker tournament for charity in Sag Harbor at the Sag Harbor Cinema. Do you want to go to, I'll be there." It wasn't like a date thing. It was not sexual, but so I went because I'm like trying to say yes to new experiences. And the whole thing, I thought last time I played poker was at Graham in Austin, and I like won the table. And so I was like, oh, maybe I'll do okay. And I was just getting pushed around from the minute that the first hand was dealt. People were like, and I would fold hands and then see like 2 pair on the flop and be like, if I just kept those cards, I would have won the hand. And then of course, the few times I did go in, I had pocket jacks, and this was after I'd bought in. And then one of the people at the table, I was like, I was going to leave after I bought in after the first buy-in, and one of the guys was like, oh, I'll stake you. And I'm like, motherfucker, I got more money than you, bitch. That's not. I don't need your charity. I just suck at poker, you fuck. And so then I buy back in, and immediately it's gone in like 120 seconds because of those pocket jacks. And I flopped a jack. I was like, I got a set. I'm gonna win this hand. And the guy hit a straight. And I just, it was just a weird experience because I've never felt. It had been a while since I felt like a little boy, honestly. And it was like a bunch of people around the table, and they had like big flashy watches, and they felt like people in the Hampton scene, and they all seemed to know each other. And I was in and out in 45 minutes.
Oh man, Sam got hustled. So what I heard from this is Sam got hustled.
Yes.
Sam got hustled. Did the guy that offered to rebuy you, is he the one that knocked you out too?
Yes, he is the one that knocked me out.
Oh my God.
And he was like, listen, it's cheap
Man,
money.
he put you on
It's
tilt.
10% a week. It's 10% a week. But if you miss a week, I'll break your fucking legs.
He's running a business there.
So I got home and Camille's like, she's like, what's wrong? What happened? And I'm like, I just want to go to bed. And then anyway, so it just wasn't good. But I woke up this morning and I went for a great 4-mile walk through the woods, and I journaled, and I just felt I feel better now. So that's how.
You
And
journaled while walking. That's interesting.
No. I journaled after.
Okay.
I went for a walk. I did meditate while walking because I'm like, you
Right.
don't have to be sitting still. You can like just listen to the woods and the birds and meditate. And then I journaled, and I'm feeling confident. And yeah, so it's been a roller coaster ride. It's just been a while since I felt so small, such like a little baby boy. Like, go home, baby boy. This is the big boys table, and this isn't
It's
for
so
you.
interesting. Poker does this. Like, there have been so many times where I have won. I used to play a lot of poker. I'd won the previous night, and I felt like a king. And the next day I went in feeling like I'm going to clean this table up. Like, I'm the best here. And I would get destroyed. And my game was the same, but like there's this element of luck in poker, right? Like there's your game, and then there's the cards that you get and the cards that come on the flop. And I would lose, like similar to you, Sam, like in 45 minutes to an hour, like all my money is gone. And you're like walking home because you can't afford the cab, because I was a university student trying to play poker to survive. And that walk of shame, like I remember the feelings there. Poker does interesting things. But
Well,
the other side of
it made me worried about this conference. Now I'm like, because the woman, she's like, the reason I'm at this tournament is because Jason Calacanis and they play poker a lot. And it's like, if you want to be in the conversation, you need to be playing poker. Like, you're going to be playing poker at this conference. And I'm like, I am just not up for like losing $10,000 or more to try and represent myself to, like this. I'm like, I got to focus on my company,
These are last famous words. I bet you in like 3 months we're talking about this, and Sam's like on his like 8th week in a row at the card table and talking about his bad beat that he had last night. So it starts.
The bags I'm even paler than I usually am. Like these massive bags under my eyes. Sam, you look unwell, brother. You're like, yeah. One more.
Delete your online chess. You're playing online poker.
I know. Anyway,
should we get this thing kicked off?
Yeah, let's do it. What's on the docket, Mr. Docket?
So let's start talking about the IPO market. So the IPO market's opening up. We can think of company building as the supply chain, where we have early stage companies and investors and professionals who focus on developing product market fit and then professionalizing these companies at scale. These companies grow and evolve, and eventually they go public. It's a key moment because a lot of the people that invest their time and resources and money at the riskiest stage make that potential upside when these companies go public. Not everybody makes it, but those who do, these are significant outcomes. So the IPO market's really important. Between 2017 and 2020, between 100 and 250 companies would go public every year. Then in 2021, we had 309 companies go public. The exit value doubled to about 750 billion from 339 billion in 2019. We all know why. Interest rates were low, tech was growing, frothy, bubbling, and outcomes were dime a dozen. Then inflation became a problem Q3 2021. Interest rates had to go up, and the bubble burst. That led to the IPO market shutting down in 2022. Only 9 billion in exit value was created in 2022. The last time we had that number,
how many companies were there in 2022?
15 or something, like hardly.
Oh my God.
15?
Yeah. The window has been closed.
The last time we had close to 9 billion in exit value was 2008. The time before that was 2001. Literally, it was like 8 billion versus 9 billion. It was so similar. Then, when these IPO markets shut down, it's a huge problem because liquidity is gained when these companies go public, which is key for the VCs that invest at the earlier stage. So, without that, they have a harder time raising new funds, and that impacts the investments they're making on the private side. The other effect is the executives who get their outcomes, they become really active angel investors in pre-seed and seed companies, and that also slows down. So you can imagine how anxious the whole ecosystem is because of the IPO market being shut. We are all looking for the signal that it's about to open, and that signal is here. We have 3 S1s out: Arm, Instacart, and Klaviyo, and everybody is really excited. I went through the S1s for us, and there was some really interesting takeaways. So Klaviyo, which is a digital marketing company for retailers, they have about 130 customers at an average contract size of $5,000. They made about
130,000 customers.
130,000. Yes,
Yeah.
sorry. They made about 585 million last year, and they grew at 57% year over year.
Fucking amazing.
Their quarterly growth rate has been declining, but they became profitable. So what was really interesting was they had 119% net revenue retention, which on a $5,000 ACV is
Amazing.
insane.
It's insane.
Their sales and marketing expense has gone from 52% to 38%. So they've become really efficient. And last year, they lost 20%. This year, they're making 8% cash. They'll be valued at 5.3 billion, 40% lower than the last time they raised money in 2021. But it's quite clear that you don't have to go public at those old valuations for the market to get excited, which is really interesting. Instacart generated 253 million in free cash flow, 10% of revenue, and a year earlier they'd burned 200 million. So they've pivoted into an extremely profitable business. Order volume, not increasing. It's stagnant, but they're now making more money of every order, and they've started an advertising business that's growing at 30% year over year and generated 740 million for them. Last one, Arm. They've generated 675 million in free cash flow, which is 25% of revenue. They are going public at 60 billion, twice as much as what SoftBank took them private for 7 years ago. So this will be a huge outcome for SoftBank, and they really need one. So they're super excited. So it's clear that the market's asking for profitability, and they're getting it. These companies can pivot once they achieve scale, which is fascinating. Sam, this is obviously a signal of some sort. But what does it signal to you as a founder and CEO of a growth stage company? When will things get better for the rest of us?
Well, the first emotion that I feel particularly when I hear about Klaviyo, because, I'm so far removed from whatever the systems and design architecture that makes GPUs, which is what ARM does, and Instacart still I have some problems with. But when I hear about Klaviyo's execution, the first feeling I feel is envy and admiration. What an incredible! It's just incredible execution. So for me, I think to your point about profitability versus growth, I think first of all, it's clear that there's that it is possible, right? It is possible to shift from a growth posture to a profitability or efficiency posture. And it would be even hard to say that Klaviyo has shifted since they're still growing so rapidly. But that's, I guess, the biggest takeaway I feel, besides, hey, this is good news and good companies are still being built in difficult environments. And I do think that this, as I've said a few different times, presages a better 2024. And I stick to my prognosis that we're really going to start to feel the winds in our sails around March, April of next year. And it's going to feel like we're swimming with the current as opposed to against the current. And I think this is the first indication of that. So that's the first thing I think. And then the second thing I think is, I just think that every CEO out there that is convinced that that they are being as efficient as possible and that there's no way that they can get to profitability, I would encourage them to take another look at particularly the S1 for Klaviyo, and really think about, and the thing I've been thinking about is, I'm not comparing myself to Michelangelo, but I'm just saying that there was this idea of, there's a big block of marble, and you remove everything that isn't, David, that isn't the sculpture. And for me, that's kind of how I've been thinking about company building, which is like, how do you make sure that every single thing in the company is serving the purpose of executing on the vision and mission of the business and executing on whatever your goals and objectives are, and that you remove everything that isn't that thing. And that's kind of my reaction. But I'm excited for Klaviyo. Other thing I will say is, I advised Rich Gardner, the former Boston chapter head. I advised him in his negotiation to become VP of Partnerships at Klaviyo many years ago, after he was leaving Catalent / Hourly Nerd. And I won't reveal any of the details, but this is going to be a life-changing event for Rich, which is freaking awesome. And it's also going to be,
Rich.
Yeah, it's really, really awesome. And that couldn't happen to a nicer person. And it's also going to be, I think his life's pretty good already, but on our board is a guy named Steve Wojtrecki. And Steve was the former CRO of ClassPass, but also the CRO of Klaviyo for a brief time. And really, I would say, I don't know Andrew, the CEO and founder of Klaviyo, but I would say, and he did it, but I would say if Steve had anything like the impact he's had with me, he was pretty formative in helping orient Klaviyo towards this eventual outcome. I don't think we're going to have the same kind of outcome that Klaviyo is, but I think every day that Steve works on Pavilion is a better business. And I'm sure that was true with Klaviyo.
Wow.
So you definitely got Carrie helping him out, right? He gave you Carrie on his offer letter.
Absolutely not. Absolutely not. And I'm just happy for him. And I think that's the other point, Asad, and I'd love to hear what IJ thinks, but it is not, here's the other thing that's been happening. You're just talking my book a little bit. Like, the past year and a half has been really fucking hard for operators, because I'm on so many calls with people that are getting fired or are having challenges with the value of their equity. And a lot of belief has been lost in the system over the last 18 months.
Yeah.
And it is really nice to know that there's a group of executives and a group of employees that are going to see and realize the promise of liquidity when it comes to equity value. And that makes me really happy, because it's still, this is, I've talked about this so many times, but it's like all of the bad things. It's a crapshoot. It's a lottery ticket. You don't have any visibility or confidence on whether the equity that you have in a high growth company will become meaningful. And it's still the only way that I know that anybody that I know that doesn't come from a trust fund and didn't inherit it and didn't work, at a hedge fund for 20 years. The only way that I know that non-finance people are rich is through equity.
Yeah.
And so it's really, really nice to see that there's going to be a new group of people that say, see, it's possible. It is possible, and great companies can be built, and the whole thing isn't total bullshit. There are great companies that can emerge from this ecosystem.
Well, and that's the only way that the ecosystem feeds itself. I think you look at different cities and towns, and you talk about the tech boom in some of these. Austin's one of them that I saw that was really from companies like Bazaar Voice or Indeed or Retail Me Not or a dozen other organizations that went public. Of course, they're Dellionaires back in the 90s. It was all folks that were seeing the public market, seeing liquidity, and then taking that and either founding companies themselves or reinvesting it back into it. Asad, I would say that, to Sam's point, it is great to see that. And I don't know anyone at Klaviyo myself, but I would just say that chart that David Spitz shared on the LinkedIn, and just seeing that every single company, I think there are like 40 companies there in the public market, had their growth rates, what happened to their growth rates. Only one company on that entire chart had a positive growth rate or a change year over year. Do you know what company that was?
No.
Adobe. Adobe went from like 11% to 12%. It wasn't that big of a jump, but it was kind of just funny to see like Zoom Info, 55% to like 13%, right? And so like as I was optimistic in last week's episode, when we continue to talk about it, I'll be optimistic this week, so I won't say anything. I really like that you're bringing that data to it, but I think there's a lot of companies right now that went public in 2020, 2021 that are really mismanaged. And I'm going to give an example. I have a friend's company. His company was bought 6 months ago by a public company. It was a good exit. The CEO was just recently publicly announced they're fired. They're trading at $2.5 billion market cap right now. They're doing $700 million in revenue. $250 million of that is in free cash flow. they're a very good company to invest in right now. And I will not say this company's name publicly, but like and I'll tell you guys afterwards, but like
I hope so.
Oh, that's exciting.
it's a really interesting dynamic. And, what he has said and what other folks that I've talked to that are at public companies is that the go-to-market models are broken. There's a very like bringing in board members or CROs that have a traditional view. And I think this was a Jason Lemkin tweet or someone else tweeted recently about if you look at the public companies in SaaS technology and what their like how they make their money, their growth, you see channel, you see PLG, you see self-serve, you see all these motions that are not the traditional B2B SaaS, pick up the phone and close deals. And so like, that's something that I think we're starting to still shake out and try to figure out what does like the go-to-market growth teams look like in the 2023, 2024 world that are efficient, but also still growing at a nice pace to meet investor sentiment in a positive way.
What I found really interesting about the David Spitz chart was there were examples like ZoomInfo, which had this dramatic decline in their growth rate, right? And then you have companies like Klaviyo that also have seen a quarter-over-quarter decline in their growth, but it's way more marginal, right? Like it's a couple of percent points below. And it seems like some are intentionally making changes that they know will impact growth a little bit, like Klaviyo reduced their sales and marketing spend, drove efficiency. They kind of knew that it would have a bit of an effect on growth, but they were willing to make that compromise. Whereas then you have companies like ZoomInfo, where that type of a dramatic drop, I think, is less intentional. It's not a bet you're making yourself. The market is impacting you, and you're in a bit of a trickier spot. On the go-to-market team side, I think it's another thing that's really tricky that people don't take into account is when you are hiring and building these teams. Let's say you have a 300-person sales team, and you've built a lot of this team when the market was really hot. You're hiring people that are suited for that type of a market, where you're probably generating demand quite easily, and so you're hiring people that know how to take that demand and navigate it through your process in the most efficient and effective way possible. A smaller percent of go-to-market professionals can do business effectively, in my opinion, in the type of market we're in and the type of market we will be in for the next bit. And so then you're sitting on top of sales teams that have people that might not have that grindiness in them to be able to create a spark in this type of environment, to get a deal prioritized in this type of market, to be able to work with the CFO effectively. The week before I left, the 3 client calls I had, 2 were with CFOs, 1 was with the chief legal officer. I didn't speak to a CRO before I left in the last week. They were the key decision makers for the 3 projects that I was involved in before we left. It's really interesting.
Chief legal officer?
Yeah. Owned HR in this company, 500-person company.
Wow.
Yeah.
Wow.
HR now reports to legal. How wild is that?
Oh my God. That's a very, how do I short whatever company that is?
They're doing well. So whatever is happening, they're doing well. Like these changes are interesting. So I think that also creates a little bit of difficulty. One of the things I've noticed is that you have founders at all stages care about the public markets, because Asia and Sam and myself, we would love to take these companies public, right? But I've noticed that professionals and even executives at the Series A and B stage, sometimes even the Series C stage, they don't study the public markets enough. They don't understand the public markets enough. Why do you think that is? And is it important for these earlier stage executives to have an understanding of what's happening in the public markets and how these companies run? Sam, what do you think?
Today's business landscape is full of uncertainty, and succeeding as a go-to-market leader has never been more challenging. Pavilion is here to provide you with the education, support, and resources you need to grow, learn, and unlock your full potential. Join more than 10,000 of the world's leading go-to-market executives in a private membership community designed specifically to fuel your success. Visit joinpavilion.com and use the code TOPLINE20 to get 20% off your membership. That's joinpavilion.com, and the code is TOPLINE20 to get 20% off your Pavilion membership. And now, back to the show.
I mean, yeah. But fundamentally, I don't have anything super profound to say, except for, like we talked about last week, it is incumbent upon all of us, and I need to do a better job of this personally, it's not just the public markets, it's the market, it's the world in which you operate.
Mhm.
You do not exist in a vacuum. We said last week, 22% of CMOs said that they didn't think they'd be impacted by a rise in interest rates or any kind of economic downturn, which is ridiculous, right? It's silly. And what it means is that there's a disconnect. Well, first of all, there's like a human agency problem, which is like, well, if you admit that, if you say that the market is the reason that you rise or fall, then you're sort of removing self-determination from the equation. And I think every CEO wants their executive team, just like the board wants the CEO to say, I don't care what happens with the market, we're going to do X, Y, or Z. But the reality of living in the world is that we're all interconnected. And yeah, I do think that more people should be reading S1s. More people should be aware of what's happening in the public markets and the reason why don't they? Because we're myopic and because we get pulled into a day of back-to-back Zooms with our leadership team. And we also, it's not easy to operationalize the quote unquote market, right? Without, if you're a CEO, if you're AJ or you're me or you're you, Asad, and you've got a head of sales or a CRO, how much time do you want to be spending talking about the recession and why the growth target that person signed up for is too aggressive and why you actually need to lower it a little bit? And then once you begin to have that conversation, then there's always a third party in that conversation about forecasting, which is the quote unquote market. And it's I don't know that there's a winning outcome in terms of how to manage your executive team if you're trying to constantly reference this sort of illusory third party that is the quote unquote market. That's probably one of the reasons why I don't see how it helps most of the time, even though I do think that we need to acknowledge it.
I mean, I'm kind of ashamed to admit this, but I think us talking about this and doing research is really the only time in the last couple of years I've done the actual thinking about the public market. And I don't mean that to be negatively. I guess my question to you both is, in management teams and operational reviews and board meetings and anywhere internally, do you all have conversations about the public market ever? I mean, Sam, it sounded like no.
No, we don't.
I take the market into consideration quite a fair bit. I feel like I'm decent at macro. Like, I'm not an economist, but I'm not bad at the market.
Well, isn't your brother an economist?
He is in the financial markets. He's really good. So it's a little bit in the family. And so I feel like what it's allowed me to do is make predictions a longer timeline that's a little bit longer than other people felt comfortable making predictions for. And over time, I developed conviction around these predictions. And so then I was able to be strategic accordingly. So I was looking at the market. I do care about the market. The other thing that I would mention is that for me, once I started investing in stocks is when I specifically started reading earnings reports, looking at S1s, listening to earnings reports as well. And they made a difference for me. I understood the market much better as I would listen to these calls, because so much of it is about sales, which is the world that I live in. And so you learn so much. And this is the one use case I have for ChatGPT, the one thing I am using it for regularly. And I haven't, it's not integrated into my life that much. We'll do an AI episode and talk about it. But I take these documents, I upload them into ChatGPT, and then I do what used to take me half an hour in 5 minutes with it. And it's made my life much easier.
I would say, okay, so let me rephrase what I just earlier said, because everyone out there is like, well, AJ doesn't know what's going on in the public market. That moron.
Everybody that listens,
everyone, all of us, all 50 people are like, AJ.
Millions of people. It's actually trending on Twitter already.
I think it wasn't just on a weekly basis like we've been able to do. But Sam, I would ask, because you had said like this general idea that our executive team, they should be like worldly, and we should care about what's going on in our ecosystem. But if we're not talking about it internally as a part of our organization, should they? I mean, I would think that as a CEO.
No, I think I was rambling in my answer. I think it's easy to say they should, but I don't know on a practical level when it would find its way into our conversation or what we're supposed to do about it. It's like, what am I supposed to kick off the ELT and be like, hey, we had a 4% inflation print, everybody. What should we do about next week's membership sign-up goal? It's like, I don't fucking know.
So for the dozens of listeners out there, I would actually turn it
Including
back
Mrs.
in.
Bruno.
I love how you
Including
guys
my mom.
undersell our listeners. Like
For all of
for
our
those who
listeners
are
out there.
listening, there's lots of you out there.
I would actually write in and I ask and tell us how often you're listening to the public markets or what your take is on the public markets. Maybe you get it from the show. Asad is my guru as it relates to the public markets. I was learned so much today. Asad, your stats at the beginning of this docket, so on point. I love it.
Well,
So
Asad, you guided the conversation, but you didn't answer yourself. So we've got these three, and there's a lot of controversy. There's no controversy about Klaviyo. Klaviyo, I would say, is the best pure software. Like Klaviyo is an example of a great IPO, and you can look at their net revenue retention and say, you know what, it has to do with the fact that they must make their customers money. Like this thing must work, right? And I was reading the S1 and reading about data layers and application layers, and I really wanted somebody to just can somebody do a demo of Klaviyo so I can actually like see what it looks like, because it's all gobbledygook sometimes, but it's clear that it works. And it's clear that, you're getting messages on your cell phone, text messages, notifications, and, cart abandonment prompts, and all of that is powered by Klaviyo in the background. And they know a lot about you. And that's really, really cool. The ARM IPO is a little different. Instacart also a little different because of sort of like their long-term growth prospects. And in some ways, some of these are just mechanisms to clean up the cap table and, get all of the share classes as one common share so that everybody can get some liquidity or figure out what they want to do. My question to you though, Asad, is, so what's does this change? Are you more optimistic, the same level of optimism? How do you feel about the next 6 to 9 months? How do you feel about 2024? When do you think your business will, do you want to raise your target for 2024? Do you want to raise your target for 2025? How are you thinking about the markets?
I think 2025 will be a party. So I'm excited for that. I think I am in line with your thinking on this, Sam, and I think AJ is the same, which is that towards the first half of next year, we will see improvement in the market. And I do think this signals that we are moving in the right direction, because there's this chain of events that has to happen for the market to get better. Inflation has to come under control. The IPO market has to open up. So I think this is just one more signal. This is at par with when I saw the 3% rating and got excited. I'm just as happy to see this because I think, yes, those things are happening that need to happen for us to believe that in the first half of next year, the market will be more viable. I don't know exactly when. I think Q1 for our business will be quite good, because even Q1 of this year was really good for us, because a lot of companies that we work with do a lot of their hiring in Q1. So I'm quite optimistic for ourselves for Q1. And then from there, I think the market is anyway improving. So I feel quite happy about 2024. I feel great about 2025, because the reality is down cycles, when you look at them across, 100 years, they're not they are momentary. And then for the next bit, you have stability. So we're going to, at the most minimum, have 5 years of stability beyond this. And I'm excited to build in that market with the new skills that I have. The one thing that I am really, really excited for is that I think we had all these IPOs when the market was very frothy. I think they are less. It means more when these IPOs are happening, when outcomes are happening in this type of a market, and when they happen in a stable market. I think those mean more to the rest of the people out there. They are more inspiring for the standard person in tech on the early stage side, because you can't expect frothiness again. Like the down cycle is a small moment, and then the frothiness is a small moment. So it's stability where most of us spend our time in. And so the fact that these IPOs are happening and more will happen will inspire other people that are at the earliest stage. And we'll have the downstream effects that we were talking about, more liquidity from VCs as well as from execs, which I think is good. So I'm happy to see it. And I think it had to happen for us to still feel the way that we feel about 2024.
I would say the other thing I've noticed, and this isn't on the docket, but something is happening. And I've talked about this in the past. Something is happening around the tools and the investment required to start a company. And we've talked about how generative AI and maybe, non-seat based pricing models reduce the overall TAM for growth stage companies that have raised north of, 50 million in financing and are stuck. Even if they're doing 50 to 100 million AR, they might be stuck relative to their valuation. And that is a problem that is shaking itself up and shaking itself out in real time. Meanwhile, though, so many founders, I'm noticing so many GTM executives where they've decided they are stepping off of the merry-go-round, the carousel, and they're going to start their own companies. And it's never been more possible. And this doesn't mean that you are the next Klaviyo. This doesn't mean that you are the next person to build $1 billion business, but you don't need to build $1 billion business to generate meaningful wealth and a lot of personal fulfillment for yourself. Off the top of my head, right? This is just not even Mike Hoffman, who's probably going to be the co-chapter head of New York. He's on the younger side. We need a face for New York City, but Mike started this company, Past Sites, where it goes through your close won and close loss analysis and figures out what are the patterns and then surfaces them. And right now he's doing it without software. He's doing it. It's a tech-enabled service. He's doing it himself and with his team, but it's highly predictive. It's highly ROI accretive. And he's non-technical and somebody that we might not have thought of as a founder 5 years ago. This guy, Brian Sowards, who was just messaging me on LinkedIn, Brian's running a business, I think it's called Coda, and they're already up to close to 2 million in run rate revenue. And he's doing similar kind of RevOps enhancement tools that can drive business productivity and business growth. Andrew Mewborn, I don't know if all know Andrew Mewborn. Andrew was an SDR at Outreach, and he's got a very specific and distinctive colloquial style. But he started this company called Distribute, which is sort of very quick landing pages and lead magnets for content as people build them and generate them, because these are tools and techniques that he's learned driving engagement on LinkedIn. And this is part of my theory and my hypothesis, and I don't have the data to support it, but I was talking about this when I was at Supernode back in May, that the alternative, there's an issue with these growth equity companies, these growth stage companies, but then there's a new layer of productivity tools that are giving non-technical people the opportunity to be founders in a way that hasn't been possible before. And that's really, really exciting. And in fact, there was a Mark, he was the CMO of some event software company, Killens, Mark Killens, and now I just saw in his LinkedIn bio, CEO, founder of something. More and more people are like, you know what? Fuck this. Even if it's 2 million in ARR and I take half the money and pay myself a great salary, I'd rather be the founder of my own company than work for somebody else. And I think that's really, really encouraging when it comes to, the overall outlook for GDP growth and also equities returns and public market returns over the next 6 to 12 months and beyond.
Wow, Mike's a great guy, by the way. I had dinner with him last month, and he was talking about the business and had a really humble point of view around it. I think that goes to what you're saying, Sam, is that a lot of these founders they're not taking the 2021, 2022 mindset, grow at all costs, and then are actually thinking about product market fit earlier in their life cycle and thinking about building real sustainable businesses, even if that means that the business isn't going to be 100 million in ARR in 2 years. They have a different point of view and a different lens. I think the founders born out of this era are going to be some of the most successful founders long term. But we're talking 10 years down the road, the ones that have staying power and sustainability because they didn't get burnt out at the very get-go out of the gates.
Well, imagine all of these founders and their top line listeners, right? They are, and I'm only being somewhat facetious. They are disciples of an efficient growth mindset. They are not in it to become billionaires, and they're not in it necessarily to, beat me at the poker table and wear a flashy Rolex. They're in it to live a fulfilling life and to build meaningful products for people that are actually usable and interesting. That's really cool. And we talked last week about how this this frailty, this anxiety disorder that's impacting the world, maybe that's the precedent to a global awakening, a global period of actualization where more people find their calling and build things of value and are oriented around the right outcomes for themselves.
Yes, and we should get Carrie for all of these companies and all these listeners because so if you're out there and you're listening and we have a weekly, that's our business model. That's Top Line's
we will
business
take
model.
your active listening as positive consent that we collectively have
Advisor.
5% of your company.
Yeah, AJ@quotapath.com. If you want to send some advisor agreements my way, I'm happy to review them.
Active listening. When you guys say this, it reminds me of the fact that when venture capital started, it was called adventure capital. It was this idea that you would help these early stage companies that were highly technical founders building highly technical businesses try to create a business, right? And it seemed like the first 20 years of the technology ecosystem where you kind of needed these technical founders because of what they were building had set the precedent for the rest of time that it had to be a technical founder. But the success rate of technical founders is not very high, right? Like the percent of seed round companies that actually make it is a very low percent. So it's like they kind of had this monopoly on being able to get venture funding from investors and be able to do this. And I do think that mindset is changing now. And I think people have realized another thing, which is fascinating. Dividends, like you can have a business that is 20 million in revenue that does 30% profit that you pull dividends out of, and you live a great life as the person who built that business. Like not everything is about losing money to potentially have this like one in a million type of outcomes. A lot of people will be very happy making $1 million, $2 million a year and being in the top 0.5% of society from an income perspective and benefiting from the quality of life that comes with that as well. And I'm noticing people are talking about dividends again. For a while, it was like this bad, you like dividends? Like now it's becoming a thing again. And I really like that.
It's very cool. All right, we've got a new segment that we're going to debut hopefully this Friday. But for now, we've got shout outs and wins of the week. Asad, you're in the Amalfi Coast. Is your shout out to the glories of Italian wine and women and the pleasures of the flesh?
I think it is such an interesting place. Like I grew up, my favorite football team was Juventus in Italy. I wore an Italian jersey when they won the World Cup. And so I'd always had this fascination with it. My mother was a history teacher and we used to talk about the Renaissance like when we were kids. So we always like had this pull towards it, and I'd never been. And I'm here now and it's so warm. Like these people are so warm. They're so nice. The food is so great. It's so beautiful. It's like, holy shit, this place exists. And you kind of read about it and you watch it in videos and shit. But then when you're there, it does do something for your soul. I feel very recharged and I've only been here for like 3 days. So shout out to these people. They're amazing.
Awesome. AJ?
I'm not going to be able to top that.
Yes, you can.
The guy's in the Amalfi Coast and he's like...
You can, the guy that just, put in your pool.
Well, no, I'll give a shout out. I think I might have given a shout out previously, but to him, but my customer at Big ID, Tom Murtaugh, is this SVP of RevOps. Yes. Sam, I pitched him on Pavilion on Friday. I know that was going to be your first thing out of your mouth. I saw Sam like winding up over there. Yes, he will. So Tom and I spent the morning hiking Jim Thorpe. I know it's not the Amalfi Coast, but Jim Thorpe, Pennsylvania, and it's gorgeous. Just talking business and talking the world. And he's an awesome customer, but also just so great to connect with him. And I will be sending him this episode of Top Line. I introduced him to Noah Kahan. You guys know who Noah Kahan is, right?
Nope.
No.
The singer? Noah Kahan?
Oh. No.
Okay. All right. Well, never mind. Anyway, thank you, Tom, for being you. It was great to spend the Friday morning with you.
Awesome. Well, thank you, Tom, and we'll get you to sign up for Pavilion. I'm going to give a couple shout outs to my people from Toronto. Had a great dinner last week in Toronto. Had a great conversation with Kyle Norton. Kyle gave us great feedback on the pod. Thanks for listening, Kyle. Josh Gutman, great seeing you, buddy. A fellow John Mark Shaw acolyte. And
I made that intro.
Yeah, fitness enthusiast. Neil Weitzman was there. Emma Lowe was there. A bunch of great people, Butch Langlois and Butch's daughter. So that's one shout out. Also, really quickly, if you're out there, Matt Marino. I love you, Matt. And he created the Pavilion Strava group. And so if you are a member of Pavilion, or you're just, Pavilion curious and you are a fitness person, sign up for the Pavilion Strava group and you can follow along. And I've already seen a bunch of people do workouts, and it'll just be good fun, good, clean competition to help us all get healthy. So Matt, thanks so much for doing that. Matt is an exceptional fitness person and runner. He completed a 60K recently, and he has taught me so much about fitness nutrition, which is something that he's really a scientist about. So thanks, Matt. Thanks, Kyle. Thanks, Neil. Thanks, Josh. Thanks, everybody in Toronto. Love you all.
I love the Toronto shout out.
Toronto was, last thing I'll say before we wrap this episode, I was going for a run. Last person I'll give a shout out to is Rick Smolin, who told me, hey, stretch your psoas, stretch your damn psoas. I stretched my psoas. I was able to go for a pain-free run, and I'm running along Lake Ontario, and I'm like, you know what? New York's fine. There's lots of good cities. Toronto's a good city.
Is psoas Canadian word for glutes? What the hell is a psoas?
It's deep in your groin, baby. I'll come stretch it for you later. Thanks for listening to this week's episode of Top Line. Stay tuned. Watch your little podcast subscription thing, because we're trying something new. It's called Top Line Hotline, and it's going to come pretty soon. So thanks for listening, everybody.
This episode was brought to you by Close, which helps organizations improve their sales win rates, build better products, and consistently uncover the real reasons they win and lose business. Visit freebuyerinterview.com to learn more. Closed, freebuyerinterview.com to learn more. Win-loss analysis is incredibly important. So thank you for listening, and thanks to Closed for sponsoring the show.
Thank you for listening to this episode of Top Line. To learn more about the trends, news, and developments impacting the world of B2B SaaS, head to joinpavilion.com, where more than 10,000 of the world's top go-to market leaders go to achieve and unlock their full professional potential.